Hello, everyone. Welcome to the IQI Canada Evening Talk. I'm your host, Celine, and I'm so glad to have a special guest today and one of our top agents, Vlad, with me today. Hi, Vlad. How are you doing today?
Hi, Celine. I'm doing really well. Thank you so much for having me. And how are you today?
I'm good. I'm good. And thank you again for having this session with me too. And Vlad, can you please introduce yourself a bit and to our audience and what exactly mortgage topic are you gonna bring in for today?
Perfect, perfect. Yes, of course. Yes. My name is Vlad, and I'm doing two things in here. I'm a real estate agent with IQI, obviously, needless to say. And I'm also doing mortgages. That's another thing that I'm doing. I'm doing mortgages. So if you have any questions about mortgages at all, it doesn't mean that the question has to end up with a deal. Like if you just have
Mhm.
a general question that you want to know, if you're just wondering about something, feel free to shoot me a text and just ask me about it. There's no problem. I'll help you. I don't expect any question to end up in a deal, obviously, but I'm ready to help. This is something that I like to do. This is just like a hobby for me as well. So I actually enjoy talking about mortgages, talking about all this and doing this. So I have no problem at all giving people any consultations that they like. So anything about mortgages, just shoot me a text.
Yeah, sounds pretty good. So today's our topic is a mortgage, and what are you gonna exactly bring for today? And yeah,
Yeah, pretty much any questions you have. We can start with something like, let's say, why people even need mortgage brokers to start with. Because
hmm
some of my friends ask me that question, why do I even need a mortgage broker? I can just go in a
yeah,
bank and get a mortgage myself.
yeah,
So
true, true, true.
I can
And
talk about
and
that a little
and
bit.
yeah,
Yeah.
and also curious about how can you be a mortgage broker? Yeah, and what are the qualification for the mortgage broker?
That's right. That's right. I'll tell you that.
Yeah.
So, surprisingly, I was shocked to find out that it's actually way easier to become a mortgage broker than become a real estate agent.
Hmm?
And in my
See?
opinion, doing a mortgage deal is actually way harder than doing a real estate deal. Because with real estate deal, there are certain documents that you have to follow, and as long as you
Yeah,
follow those certain documents, that's pretty straightforward. You just sign them and you think about what you're signing. With mortgages, there's a lot of calculations involved. There's a lot of paperwork, and like pretty much people who ever went through the mortgage process, either getting a mortgage for themselves or looking for a mortgage, they would know how much paperwork is involved, how much calculations are involved. It's a pretty draining process, and the education is very fast. So the education takes about, let's say, couple months or even sometimes couple weeks.
okay.
It's not as complicated as Humber College for real estate, I would say. It's way
Okay.
faster, way easier, and it's actually way cheaper. Way
Oh,
cheaper. Becoming a mortgage broker is going to cost you just over $300. That's it.
$300. Okay.
That's
So
very cheap.
so the maybe couple months you can get a license or something?
If you sit down,
Okay.
concentrate, and study full time, I think you can do it in like 2 weeks.
Two
That's
weeks.
realistic. Yes. If you just
Oh,
take your time and absorb information and do it slowly, I don't think it should take you more than 3 months. I don't think it
okay.
should. It's very fast to do. It's actually very fast. And then you pretty much become, in order to get a license, it's same with as in real estate. You have to be hired first by any
Mm-hmm.
agency, and then once you're hired, now you get your license, and now you can go ahead and start doing mortgages. And pretty much it's a lot of work to do in the first, because what you study is a little bit different from what you get in reality. Because
Yeah,
in
true.
reality, it's the process is,
You,
it changes all the time, it evolves.
yeah.
There are some new rules coming up, there are some new processes coming up, so you have to constantly stay on top of that. And there is also ongoing courses that you must take annually, same as in real estate, where they do
Okay.
update you a little bit on what's going on in the market, but there is still a lot you have to do on your own, a lot of things that you have to learn on your own pretty much. You just have to do Google researches, you just have to ask your principal broker how it works, a lot of technicalities that you have to study. All it's continuous, a lot of information to absorb. You just have to know a lot of technicalities how it all works. Otherwise, without knowing those technicalities, you can't give your client the best deal, because you have to know ins and outs. Okay, I can do it this way, but I cannot do it that way. um, Otherwise, if you don't know something, you're just gonna tell your client, sorry, we can't do that, when
Okay.
there possibly is a way to do it if you knew the information. So there's you have to pretty much the answer is you have to study. You have to constantly study. It's a lot of
Okay.
information to absorb. But the
Yeah, and then
official
I
course,
believe
very fast.
sometimes the principal will change all the time, and maybe not here, maybe not in Canada. Sorry.
But yeah,
Yeah.
yeah. But yeah, the whole process is actually not expensive. It's
Mm-hmm.
it's very fast. It's not that hard. It's just once you got a license, that's where the hard part begins. Because once you start doing the actual deals, there's a lot of information you have to know. That's the hard part of it. And then the annual fees, they are a little bit higher than in real estate deals. So your annual payments to maintain your license are going to cost you more than in real estate. But with
Okay.
real estate, it costs you way more to originally get the license.
I see. I see. So, but as the home buyer, and I'm curious. I mean, for example,
Hmm,
and I'm
hmm.
curious why we use a mortgage broker and not just go to the bank to file by ourselves.
That's yeah. A lot of people ask that, like, why would I even use you? So the answer is very simple. The bank is this just one bank. You go to one place and they give you whatever they have to offer you. When you go
Mm-hmm.
to a mortgage broker, we have access to tons of banks. We have access to pretty much any licensed bank in Ontario. Not even
Okay.
in Ontario, it's in Canada, but usually we work in Ontario. So I would choose province of Ontario. It will give me the list of all banks there are. And then I will just punch in whatever my clients is looking for. If you want to renew your mortgage, if you want to buy a property, if you want to refinance, I would choose that. Do you want to buy
Okay.
a property for yourself or do you want to buy a rental property? How much is your property worth? How much down payment you put? I will fill in all the blanks and I can do it from my phone. That app is, I just downloaded an app on my phone. You just do everything from your phone. And right here, right then, it takes me like 30 seconds to do it. I can tell you this is the best rate available on the market right now. There's absolutely no way that you will find a rate better than this. So, in order,
Okay.
and usually it's some small bank because the bigger the bank, the less they care about finding clients because the clients will go to them themselves. If you want to get a mortgage, you usually go into one of like big 10 banks. It's usually like TD, CIBC, Scotia,
Mhm.
RBC, BMO. And the more you keep talking, the very soon you're just going to run out of banks. Nobody heard about banks like AmCap, CMLS, or some First National. Nobody even knew about those banks, but they give you
True.
very good rates. They give you very good rates. So the smaller the bank, the better rates they give you. And it's still the A lender. It's still A lender bank. It's not any different from TD, RBC, or Scotiabank. They have all the licenses, they have all the insurances. It's exactly the same as any other bank offers, but they give you way better conditions because not too many people know about them. So they have to be aggressive with their advertisings and with their deals. So coming to the mortgage broker, I have access to all of those banks to give you
Okay.
a little bit more. So you go to a big bank yourself, you walked into a bank. The first thing the bank will tell you is give me all your information and fill in the application. You fill in the
Yeah.
application, you provide them with all the paperwork. They look at your financial situation, what you want, and they can tell you, okay, you approved, or no, you can't qualify, you rejected. Now you have a rejection, and it is marked on your credit report that you applied with them and you didn't get the mortgage. So now that you go to a different bank, they're going to be okay. So this bank rejected him for some reason. Let's see. Now we have leverage because he can't get a mortgage anywhere. When you go to the mortgage broker, first I'm going to run what's the best rate available. I can tell you
Okay.
that's the rate. And then I will see what this bank needs in order for you to qualify. I can see right here, it tells me this is the qualifications, what this client needs. Once I collect all the paperwork from you, I don't send it to the bank. First,
Mm-hmm.
I check it myself and I see, okay, does it match? Yeah, you know what? It's not going to work for you because they want this, this, and this, and you actually don't have that. So we're going to
Mm.
skip this bank. We're not even going to send them the paperwork. And let's move on to the next one. Yeah, with this one, you actually go through. This one will take it. So if we apply through the mortgage brokerage, you guaranteed to get approved. Otherwise, I
Okay.
would not even take your application.
Okay. So you mean
Otherwise,
the guarantees are you will find the best way to
yes.
give them.
Or if I see that you cannot be approved, I will just tell you up front, I'm sorry, it will not work. I can't
Okay.
approve you. It just doesn't work. So it doesn't make
See.
sense to apply and get rejected. So with the
Mm-hmm.
mortgage broker, you're not going to get a rejection from the lender. The mortgage
Mm-hmm.
brokerage is going to tell you, don't even apply. And you didn't even
Oh,
apply in the first place, and that's it. And actually, coming back to the rates, not only I'm going to find you the best rate that I can see on the list, not only that, but also how it works. It's same as in travel agencies. Let's say, for example, if you go to Air Canada and you want to buy a flight somewhere, they're going to tell you that's your price. But if you
Mm-hmm.
go to the travel agency buys them in bulk, kind of like Costco
Right.
sells something in bulk.
Right.
So they give you the special price because they don't buy one ticket, they buy thousands of those tickets. They give you the best price. Same with
Mm-hmm.
mortgages. If I, as a person, will walk into, let's say, CIBC and say, give me a mortgage, they're going to say, this is your rate. But my brokerage that I work for, they buy those mortgages in billions. They
Mm-hmm.
they don't buy them. They provide clients for billions of dollars. So now the lender gives them a preferred rate. The rate is a little bit lower than for general public because we do in volume. So
Mm-hmm.
now that you come with a mortgage broker, the rate is going to be lower than if you went to exact same bank yourself, simply
Oh.
because we do volume, simply because of that. And that's why when you choose pretty much, if I choose what a real estate agency to work for, what we're looking for is family environment, support, knowledge. That's what we're looking for. It doesn't really matter how much volume the agency makes, to be honest, because if
Mm-hmm.
I want to find my friend a condo to buy, it doesn't matter if my brokerage sells billions of condos, or just one condo a month. It makes no difference. I'm still going to look for a condo for my friend, and all that matters is how the condo looks like for my friend. But when you would deal with mortgages, it's important to work for a big brokerage, for some big agency. The bigger the mortgage brokerage, the more volume they make per year, the better discount they get.
Mm-hmm.
That's how it works.
Yeah.
So it makes sense to join the biggest mortgage brokerage. It's okay, you're going to have to pay higher fees. It's going to cost you more as an agent to join them, but you're going to get the best deal for your client, and people will come to you because you get the best rates on the market. That's another
But
reason to go to the brokerage.
how about for the customer, for the client, and what about their service fee? Is any service they have any service fee they have to pay or?
Sometimes there is, sometimes there isn't, and I'll explain the difference. If your deal is a straightforward deal, you go to a lender, a normal registered lender, a bank. There is no fees for the client. The client shows up, gives all the paperwork. We find him the best deal. We'll work everything out. If the client says, you know what, I changed my mind, I don't want to do it anymore, I'm done. There's no
Mm-hmm.
fees. The client doesn't pay anything, just walks away. If we found
Okay.
him a deal, we connected him to the lender, he got the mortgage, no fees, client pays nothing at all to us. Because the bank, the lender, gives us the commission. This is how it works.
Okay.
The lender who gives us the commission. But if the client cannot qualify with any regular bank, all A lenders, we check in the qualifications. I'm sorry, you just don't qualify. You have too much debt, you don't make enough profit, you're too new in the country, you don't have history of employment, you just got hired a month ago. We cannot qualify you. I'm sorry. So what we can do is we can find alternative lenders,
Mm-hmm.
B lenders or private lenders, which you would not even probably be able to find without the brokerage. And again, we have a lot of B lenders available. We have a lot of private lenders available. So we would just go and pick the best one for you. We will pick the best
Okay.
one with the best conditions, the best rate for you, and we're going to say, okay, this lender will work for you. Now, the alternative lenders, which are B lenders, private lenders, something like not a big bank, they
Mm-hmm.
don't give us any commission. So when they give you a mortgage, we have to get paid somehow. That's when we charge the client. It's not
Okay.
going to be a
So
surprise. So you're gonna say, okay, I want to get a mortgage. We'll look
okay.
at your file. We say, I'm sorry, you do not qualify for an A lender. Your file just not gonna work with an A lender. If you want, we can connect you with a B lender. Would you like that? Yeah, okay, I'll try that. Let's try. So I go through all the B lenders, find the one that can qualify you and offers you the best conditions, and I'm saying this is the best deal that I can find for you. These
Okay.
are the conditions. And this lender charges these fees. Would you like to continue? And if you say
Okay.
yes, you go ahead and you continue, but there's a fee involved. And usually the fee is around 1%
Okay.
from the deal.
From the deal. Okay.
So if the mortgage is, let's say, if you need a $500,000 mortgage,
Mm-hmm.
then that's 1%, and that's
Mm-hmm.
what's it gonna be? $2,500.
To us. Yeah.
Yeah, so that's a $2,500. You have an option how to pay it. You can either pay this $2,500 on the closing day when the deal
Mm-hmm.
is closing. That's one
Mm-hmm.
option. Or another option, you can build that $2,500 into your mortgage. So now
Oh,
your mortgage
see.
is not going to be 500,000. It's going to be
Mm-hmm.
500 to, it's pretty much 5250. Yeah,
Mm-hmm.
500,000 and another $2,500 on top. That's your new mortgage. Yeah.
Mm-hmm.
And then with alternative lenders, with B lenders, with private lenders, we can work out a deal where they, again, the interest rate is going to be again a little bit, the better the deal you have, the yeah, the interest, the better conditions you have, the interest rate is usually a little bit higher. If you want the best interest rate, they usually give you the most strict conditions. That's how it
Okay.
usually works. So if the lender is
See.
flexible, oh yeah, we don't care about this is okay, you can change this, no worries, the interest rate is going to be higher. But if the lender
Mm.
is like, this is our rules and we change nothing, usually this is the best rate you can get. That's how it usually works.
Okay.
So with a B lender, with alternative lenders, we can work out a deal where you only pay interest rate. That's all you pay, only interest rate. So you borrow, let's say, the same 500,000, and all you pay, let's say we borrow it just for the ease of calculation, just so it's mathematically easier for us to calculate. Let's say at 10%. That's the rate that you get, 10%, for example. So $500,000, 10% of that is $50,000.
Mm-hmm.
That's your annual interest rate. That's how much you're going to pay in a whole year. We take
Okay.
that $50,000 and divide it into 12 months.
Mm-hmm.
That's what you're going to pay to the lender. Every month, you're going to pay 1/12 of that $10,000, $50,000. You slowly pay it off. You borrowed 500,000, a year passed by, you still owe the same 500,000. Nothing changed.
Mm-hmm.
But the good news for you is you only pay the interest
It,
rate. So your cash flow is going to be a little bit easier.
uh-huh.
Some people go with that. So let's say
Yeah.
realistically, right now, the rates for private lenders realistically around 8%. That 8% will give you interest rate only. That's all you pay, just interest rate. If you want a lower rate, let's say 6%, no problem. But with 6%, you have to pay both interest and principal.
Mm-hmm.
So it's kind of better for you to take the lower rate because you pay less interest rate and you also slowly pay off your debt, but your
But
monthly
how?
payment is going to be big.
Okay, sorry. But
Yeah,
how
yeah.
long? How long will be the only pay the interest rate? It's like a for should be like a 2 year or 3 year in
Yeah,
pay
it's all
the rate.
negotiable. With private lenders, it's all negotiable. You can even take a mortgage for a month, for 3 months, for half a year, for 2 years. It's all
Okay,
negotiable. Yeah,
because of
it's how you negotiate it. Yeah, yeah.
I
It's all
see, I see.
depending on how long you take it. The interest rate is going to be different. Like we all know that
Mm-hmm.
interest rates are going up right now.
Yeah.
So if you want a month term, they're just going to give you the current rate and they don't really care. They're going to give you
Mm-hmm.
whatever the they will base it on the prime right now. But if you want to lock it for 3 years, the lender is going to think, well, wait a minute, in 3 years, probably the rates are going to go high up. So I'm going
Mm-hmm.
to give him some high rate that I anticipate to be in the future. That's the rate
I
I'm going
see.
to give him. So if you want
Mm-hmm.
to close it for a month, the rate is going to be
Mm-hmm.
lower. If you want to close it for 3 years, the rate is obviously going to be way higher.
I
Yeah, that's how
see.
they look at it. That's,
Okay.
and with private lender, with A lenders, with the big banks, they compete with each other and the rates are usually very low. With the
Mm-hmm.
private lenders, how it works is private people with their private money giving you a loan. So realistically, it's whatever we negotiate with them. It's whatever they
Mm-hmm.
feel comfortable with. Some
Mm-hmm.
people will be like, yeah, you know what, I'll risk it. I'll take high interest rate. I'll just, and another person will say, I don't feel safe giving him my money. I'm not going to take that deal. It's
Mm-hmm.
private people. We just negotiate with private people. Yeah, they register with our private people with money, come up to our brokerage and they say, I have money. I'm ready to invest it in mortgage.
Mm-hmm.
And our brokerage registers those people. So now when a client comes in and he doesn't qualify for any mortgage and he has to go private, all I have to do is just open this list of available
I see.
people and see, okay, what's
Yeah.
the conditions? This guy only can offer 300,000. That's all he has in his
Mm-hmm.
pocket. We can't use him. Okay, this
Mm-hmm.
guy offers 500,000. Okay, we need that. Oh, but he wants to lock it for 5 years. Yeah, no way. We don't need that. Oh, yeah, this one will give us 1 year. That's perfect. And so I just go and choose. I don't manually do it. You can just punch it in a filter and it
Uh-huh.
will sort it for you. But that's how it
Okay.
all works. That's how we choose them. Yeah.
Yeah, sounds pretty interesting. And I think this part might be a little many story to talk about. too.
Yeah, this,
That's really
yeah,
good.
yeah,
So since this topic is very helpful and I feel very interesting, and I believe this topic will break it down for the several series, right?
yes, yes,
Okay. So if our audience, if you are the first time home buyer or you have extra money you want to invest properties, and don't forget to follow IQI Canada and give us a like or keep a stay with us. Any questions, feel free to leave the comments or contact us. See
definitely,
below. Yeah.
definitely.
Thank you,
Good.
Vlad. I can't wait to see you next time.
Anytime. Thanks, thanks.
Yeah. Thank you for
Thank you.
watch.
Thank you so much. Bye bye.
Bye.